If you're on Social Security, SSI, or SSDI, I need you to slow down for a moment and really listen to this, because what's coming next year is not being explained clearly, and for millions of people, that confusion could mean less money, delays, or problems you didn't see coming. Now, some of what I'm about to share is actually good news, real increases, real adjustments, but some of it's the kind of change that quietly catches people off guard. And by the time they realize what happened, it's already too late to fix easily. Today, I'm walking you through the most important benefit changes that are lining up for the year ahead. Not rumors, not clickbait, real rule changes, real numbers, and real consequences. And I'm going to explain this the way Social Security never does. Plain English, no legal language, no confusing charts. By the end of this video, you'll understand your benefits better than most people who call the SSA helpline. Now, if you're new here, welcome. This channel exists for one reason: to help people on fixed incomes avoid mistakes that cost them money. I talk to seniors, disabled workers, widows, caregivers, and retirees every single day. People who are trying to survive on checks that don't stretch far enough anymore. And the biggest problem I see isn't fraud or laziness, it's lack of clear information. So let's fix that today. Let's start with one of the most misunderstood rules in the entire Social Security system: working while collecting benefits. If you're collecting Social Security before your full retirement age and you're still working, even part-time, this applies to you. And yes, this includes grocery store shifts, Uber or DoorDash, seasonal work, self-employment, side gigs, consulting. Social Security doesn't care how small the job feels. They care about the income. For the upcoming year, there is a yearly earnings limit if you're below full retirement age. If you earn over that limit, Social Security starts taking money out of your checks, not taxes, benefit reductions. Here's how it works. If you are under full retirement age for the entire year, you can only earn up to a certain amount before penalties kick in. Once you cross that line, Social Security withholds $1 in benefits for every $2 you earn over the limit. Let me slow that down. You earn too much, your check gets smaller, not next year, not someday, right now. And this is where people get hurt financially, because many retirees think, I'll just work a little extra this year, but they don't track it closely. They go over the limit. And then Social Security sends a letter months later saying, we overpaid you, you owe us money back. Now yes, technically, that money can be credited back once you reach full retirement age. But in the real world, that doesn't help when rent is due today. So if you are working while collecting early retirement benefits, income tracking is not optional, it's survival. Now here's the next group, and this one is huge. If you are collecting Social Security now, but you will reach your full retirement age sometime next year, the rules change. The earnings limit becomes much higher, and the penalty becomes much lighter. Instead of losing $1 for every 2 earned, it becomes $1 for every 3, and only for the months before you reach full retirement age. This means timing matters, birthdays matter, work schedules matter. 2 people can earn the same amount in the same year, and one gets penalized while the other doesn't. This is why blanket advice online is dangerous. Your exact age, your benefit type, your work income, your timing, all of it matters. Now let me give you some good news. If you have already reached your full retirement age, there is no earnings limit at all. None. You can work full-time, part-time, start a business, make 6 figures. Your Social Security check does not get reduced. This is one of the most powerful but least understood benefits in the system. Many retirees stop working out of fear, not because of the rules, but because no one explained them properly. Now let's talk about disability benefits, because this is where mistakes become extremely expensive. If you're receiving SSDI, Social Security watches your income like a hawk. There is a strict monthly earnings limit. Go over it, and Social Security may decide you are no longer disabled under their rules. And once they decide that, your benefits can stop. Not pause, stop. Even worse, they may say you were never eligible for certain months and demand repayment. This is how overpayment nightmares start. Letters, appeals, stress, months with no income. For SSDI recipients, there is a specific monthly income threshold called substantial gainful activity. This number is different depending on whether you are considered blind or non-blind under Social Security's definition. And no, Social Security does not always clearly tell people which category they are in. That's why people accidentally cross the line. This is also why you should never assume a few extra shifts are safe. 1 month can undo years of stability. Now let's shift to SSI, because SSI works completely differently and many people confuse it with Social Security. SSI is not based on work history, it is based on financial need, which means Social Security watches everything. Income, assets, bank balances, help from family, even small changes can affect your monthly payment. For individuals on SSI, the maximum monthly benefit is increasing. That sounds good, and it is. But here's the part no one likes to talk about. The asset limits did not change. That means you still cannot have more than a very small amount in savings. Not for emergencies, not for car repairs, not for medical bills. This keeps people stuck. And while there are small increases in monthly payments, the rules that keep people poor remain in place. Now for couples on SSI, the combined benefit is also increasing. But again, the marriage penalty remains. 2 people living together often receive less per person than if they lived separately. It's one of the most criticized rules in the entire system, and yet it still hasn't been fixed. Now, before we go further, let me say this clearly. None of this is meant to scare you. This is meant to prepare you. Because when you understand the rules ahead of time, you make better decisions. You don't get blindsided. You don't get surprise letters. You don't lose sleep wondering what went wrong. And in the next part of this script, I'm going to walk you through benefit credits, work history rules, tax changes, the cost of living increase, and the hidden expenses that eat into your raise. Most people never connect those dots, but you're going to. A lot of people get confused, and that confusion can cost you years of benefits if you're not careful. I want to talk about work credits. This doesn't get enough attention, but it matters a lot, especially if you haven't started collecting Social Security yet. To qualify for Social Security retirement benefits, you need 40 work credits. Most people hear that number and think, oh, I've worked my whole life, I'm fine. But that's not always true. Work credits are not automatic. They are earned based on how much you make, not how long you work. You can earn up to 4 credits per year, and each credit requires you to earn a minimum amount. If you earn less than that amount, you might work all year long and still not get all 4 credits. This especially affects stay-at-home parents returning to work, people who worked cash jobs, people with long gaps in employment, immigrants, people who worked part-time for many years. Every single year you fall short matters, because if you reach retirement age without 40 credits, you don't qualify for retirement benefits, even if you're 70 years old. Now here's the good news. If you're close to 40 credits, even a few years of modest work can push you over the line. That's why understanding this early gives you power. Now let's talk about something that gets headlines every year, but is almost never explained correctly. The cost of living adjustment, or COLA. You hear the percentage, you see the headlines. But what you actually feel in your bank account is very different. For the upcoming year, there is a COLA increase. That means Social Security checks are going up. But let me explain what most people don't realize. COLA is applied to your gross benefit, not your take-home amount, and at the same time, other costs are increasing. The biggest one? Medicare. For most beneficiaries, Medicare Part B premiums are automatically deducted from your Social Security check. So yes, your benefit goes up, but so does the amount being taken out. This is why many people say, "My Social Security went up, but I don't feel richer." That's not in your head, it's math. And for some people, especially those just barely getting by, that difference matters. Now here's something important, and most people don't know this. Even if you are not collecting Social Security yet, COLA still applies to you behind the scenes. If you are eligible and at least 62 years old, your future benefit grows with COLA every year. So when you eventually claim, those increases are already baked in. That's good news. Now let's talk about taxes, because this is another silent hit. Many people assume Social Security is tax-free. It's not. Depending on your total income, including pensions, withdrawals, and part-time work, up to 85% of your Social Security benefits can be taxable. Not everyone pays this tax, but more people do than realize. And this becomes a bigger issue when you go back to work, your spouse starts collecting benefits, you withdraw from retirement accounts, you sell property. All of that counts. This is why year-by-year planning matters. Now let's talk about something uncomfortable: overpayments. Overpayments are one of the biggest stressors for beneficiaries. Here's how they usually happen. You earn too much, you don't realize it. Social Security keeps paying you. Months later, they send a letter saying, "We overpaid you, you owe us this money back." Sometimes thousands of dollars. And here's the worst part. It doesn't matter if it was their mistake. They still want the money. Yes, you can appeal. Yes, you can ask for a waiver. But that process takes time. And during that time, they may reduce or stop your checks. This is why prevention is everything. Track your income. Report changes early. Don't assume Social Security will catch it. Now let's talk about SSI again, because SSI recipients face unique challenges. SSI is extremely sensitive to changes. If someone helps you pay rent, if a family member gives you money, if you move, if your bank balance goes up even briefly, all of that can affect your benefit. And many people don't report changes because they don't realize they need to. Then the letter comes, then the panic starts. If you're on SSI, documentation is your protection. Keep records, report changes, ask questions. Now let's zoom out for a moment. All of these changes, limits, and adjustments can feel overwhelming. But here's the truth. Millions of people successfully live on Social Security, SSI, and SSDI every single year. They work part-time, they manage benefits, they avoid penalties, not because they're smarter, but because they're informed. And that's what this channel is about, giving you clarity before problems start. Now I want to give you a simple action plan, nothing complicated. First, know which benefit you're on. Social Security Retirement, SSDI, or SSI. They are not the same. Second, know your limits, earnings limits, asset limits, monthly thresholds. Write them down. Third, track your income monthly, not yearly. Problems start month by month. Fourth, open and read every letter from Social Security. Don't ignore mail. Fifth, ask questions early, not after the problem happens. Now, one more thing before we wrap up. If you are approaching age 65, Medicare enrollment matters. Missing enrollment windows can cost you money for the rest of your life. Late penalties are real, and they don't go away, even if you're still working, even if you feel healthy. This is another area where small timing mistakes become permanent expenses. So plan ahead. Now let me end with this. Social Security is not perfect. SSI rules are outdated. Disability reviews are stressful. But knowledge is leverage. And the more you understand, the less power fear has over you. If this video helped you, even a little, do me a favor. Subscribe to the channel. I post updates like this regularly, breaking down complex rules into simple language. Share this with someone who needs it, a parent, a neighbor, a friend on disability, And if you have questions, drop them in the comments. I read them. I use them to make future videos. You are not alone in this system. Stay informed, stay prepared, and take care of yourself.